Hello, hello, hello. Welcome to Our Stock Trades. Mic check 1, 2, 3. How's everyone doing today? Okay, guys, this is a SoFi video. We're going to go ahead and talk about this five-star analyst that everyone is wailing about. He just went ahead and issued a price target. Now, let me tell you something. Yesterday, we made a video literally a day ago. It got 769 views, and we showed you how we were able to calculate the price target of SoFi, and we got a bull case of $15.47. So be that as it may, we went ahead and hit that, and I was able to mathematically show you how these analysts arrive at a price target before the analysts arrive there, if that makes sense, right? Which is, I've been doing this for over 10 years, which is one of the reasons why instead of relying on someone for someone to fish for you, I mathematically teach you how to calculate your own price target so you don't rely on anyone but yourself, okay? But I have seen a lot of misinformation online. A lot of people are posting a five-star analyst with a time frame of 2 years with no benchmark. Okay, this is actually misleading. It looks like he is able to return 12% over the S&P 500. That is incorrect. If you add the S&P 500 metric, his success rate is 37% with a one-star purpose, with a negative 9.10% return. So I say this and take it as a grain of salt, but the whole purpose of this, we are truly data-driven, right? We are data-driven investing, right? And we want to basically be clear, and we want to use data that is in line with truth and honesty. And to say that this person has outperformed the S&P 500 in the past 2 years is incorrect. But hold on there. We do believe that based off of this guy's analysis. I haven't looked at his other stocks, right? We can access them through the brain machine terminal, which is our technology, looking at all these commands that you guys have access to be able to look at analyst commands and et cetera, et cetera, et cetera. We can use this to see who this guy is. But it's important to note that we believe that small caps and potentially some mids will outperform in the next 5 to 9 years, more preferentially on the small cap side. So with that case, we do believe that he may show signs of outperformance of the S&P 500, given this analysis here, which is a 96% upside return. But to say that this guy has a 2-year time frame history outcompeting the S&P 500, that's incorrect. Okay, that's incorrect. So we want to again. Here he's ranked 422 out of 8,688. When you add the S&P 500 as a benchmark to compare with this 2-year time frame, it actually he ends up being last. Again, no hard feelings to you, John. We wish you all the success to get to this level comparison to the S&P 500. We just want to be honest to our subscribers. And if you haven't done so, if you do like our content, please hit that like button and smash it, and then go ahead and hit that subscribe to help other retail investors, democratize this information for all. Right? So let's talk a little bit about what we did here. So all we did is we've taken a 10% of revenue to estimate free cash flow. So again, a lot of people always basically, a lot of people go ahead and, talk about it and say, Al, how do you just take a 5% to 10% revenue of free cash flow? Again, I've been doing this for 10 years, guys. I've analyzed thousands of companies, and that's, pretty much what I've come down to. It's a little trick you can do to basically hijack the intrinsic value calculation on the estimation of free cash flow side. Our proprietary intrinsic stack calculation actually not only does one intrinsic value, it actually does, as you can see here, 4 intrinsic value calculations in one go. And what we did here is, because of the gross margins being high, if you don't recall in our video here, let me just zoom out real quick. If you don't recall in our video, we talked about how the gross margins for SoFi Technologies is actually in the 81% region. So we were pretty much comfortable doing an estimation of free cash flow of 10%, given a $15 price projection. So again, this adds on to the fact in our reliability of what we've been doing. We called it out as a sell at 20. We went ahead and got in at 4. We called it a great opportunity, and now we're calling it another great opportunity. Our independent equity research works. Now I just want to go ahead, and I did post this on our group here. on January 22nd, and I said, hey guys, Tesla's looking quite attractive, especially in the 180 to 190 region. Obviously, it was trading at $210. Now, most people would look at me and say, oh, you're full of crap. How the hell is Tesla going to go to 180, 190? Well, if you go ahead and look at Tesla now, it's currently at 182. In fact, if you go ahead and look at the line here, it just literally gapped up and hit at our downward channel trajectory line. And again, this is just simple technical analysis. For all those people that have a bunch of technical analysis grids that looks like literally spaghetti with looks like a herpes infection, in my opinion, to me, that's a little too much. You don't need that, right? You just need simple technical analysis grids. And I just use Webull here. We also offer our own AI implanted support and resistance lines, which you've seen, and also charts as well. But this is very simple technical analysis, and we're going to be basically formulating this into our beta access mastering stock market course, to give you an edge, right? The whole point is you're not trying to be top 1%. You just be in the top 90%, guys, of technical analysis, and you'll be able to know more than majority of people that just basically trade on Robinhood, right? So it'll give you an edge. So overall, there is a gap up, as you know. Gap up needs to close. So obviously, this thing is going to rebound. The question is this going to basically touch our downward trajectory and rebound off of this downward channel? Well, only time would tell. But overall, this is looking basically oversold, sexy, as you can see here on the technical analysis grid. We called it out right here, saying, hey, we're going to look at this downward trajectory, so we're going to take advantage of this. And you could have, pretty much kept on trading this and really enjoyed these gains. And then again, this is how swing traders make their money. Overall, looking at this analysis here, and we're going to make a separate video of this. If you look at January 22nd and you go hit up the 1 month, January 22nd was right around here at $208. And now Tesla's down, 12.53%. So a lot of people were buying the dip up here, not knowing anything about technical analysis, let alone fundamental analysis. And again, it's unfortunate because there's a lot of people out there that have a lot of subscribers and followers. It is what it is. Good investing, SEC is one of the SoFi subscribers on our YouTube channel said, sex sells, good investing and good due diligence doesn't. So it is what it is. We're the real deal. We believe we, do our homework, and, our analysis will let them speak for themselves. So we're going to go ahead and go to the comment section here. Yo, how you doing? What's up, amigo? Rudy, how you doing? Or DCA, anyone can be 100% on trades. Absolutely. No hard feelings to you, John, but you are terrible. Are you still going to do an analysis of FIGs? Yeah, I need to go ahead and re-up of that. It's one of those long-term plays for disruption, really on a good for mergers and acquisitions, because a lot of healthcare providers swear by this, and it's almost like a statement that says I take care of myself, and how doctors don't know nothing about business. I mean, we have literally residents that are making $4,500 a month, with $300,000 and $400,000 in debt, buying $100 to $300, $400 scrubs. I mean, just complete nonsense. But again, this is for them, this is like their reward, right? Rather than investing and maximizing their maximizing their IRA and their match accounts that their employer gives them. But I digress. So I have exact same top line, and Webull too. Hell yeah. Kathy Wood bought 33 more in Tesla shares today. Yeah. So this pretty much further corroborates our analysis that maybe this might be a good rebound here, to take a good swing trade and kind of ride this out here until we get further analysis of Elon doing Elon's thing. Honestly, maybe he just he wants the stock price to crash to take advantage. Tesla's a meme mega stock, first of its kind. I mean, definitely it's where retail investors got it right. Another one that I'm actually worried about is, we did get to these lows. Now, again, to get to these lows again, I highly doubt it. So I think maybe worst case scenario, we might see 166, 152. But again, I need to do the artificial intelligent technology graph resistance line. So we'll go ahead and remake a separate video. But overall, folks, if you definitely love and enjoy our content, smash that like button. Take advantage of the products that we offer. And just to give a quick shout out to the products we offer here, we have a $800 off coupon code for Al Stock Trades lifetime access, including our stock terminal. You guys can go ahead and essentially get access to all of our stock lists and our portfolio hedging modeling system, take advantage of our top selling book and as well as our other books here. And if you are on Apple Podcasts and Spotify, take advantage of that. In fact, we're very proud of Apple Podcasts here, because if you were to go ahead and go to Apple Podcasts, Al Stock Trades here, we go ahead and we're actually have over 400 reviews. We have 490 reviews, so our podcast is blowing up. I think people everywhere are noticing it. We do believe we're being shadow banned on YouTube. It is what it is. People just don't want this information to circulate. But hopefully, they don't shadow ban us on Apple. I said it, they probably will. But just take advantage of this, guys. Again, good investing doesn't unfortunately attract the masses, but we're going to continue sticking with our guns and our due diligence. And we believe retail investors will eventually figure this out. All right, folks, you follow me on Spotify, apps. Hey, man, thank you so much. Again, thank you for all your guys' support. It means the world, to us. And we're just going to continue doing what we do and help out retail investors and just be that, signal amongst the sea of noise of just pure nonsense and BS that CNBC and all the other, incumbents in the media spread out. So just on the next video, we'll talk about Humana. Humana just had a huge destruction in their stock price, literally down 11%. Like, look at that drop off. I mean, Humana is just being destroyed right now. And this is not your normal destruction. This is a pretty significant destruction, guys. The reason why this is significant is they post losses that are pretty much almost 10 to 11x more than the last year's. And then this thing is affecting even United Healthcare. Literally $26 billion coming out on United Healthcare today. So there's a lot to talk about, guys. There's a lot of great stuff here. And we appreciate your guys' just tuning in and supporting the channel. That means the world to us. Again, our mission is very simple. We want to empower retail investors to get a fair shake on Wall Street. And we want to thank you all for making this mission true. God bless each and every one of you, and I'll see you on the next one.